What's up, traders? So today I'm going to show you how I've been trading Bitcoin in order to bring in an extra few thousand per month. If you're new to the channel, my name is Rashad. I am a full-time options trader, and I use the money I make from options in order to pay for my entire lifestyle and my family's. Now, I'll be 100% honest. With Bitcoin and really cryptocurrency in general, I was never a big fan of it. I always stayed very clear from it, and the reason for that is I started off as a fundamental investor. So I'm very used to looking at income statements, cash flow, balance sheets, and judging what I would like to pay for a company based off their cash flow. And you really can't do that with cryptocurrency. However, with the new administration coming in and them being very bullish on cryptocurrencies, that kind of changes things. And so since the election, I've been trading Bitcoin very heavily. So now I'm going to show you how I've been doing it, and make sure you stay to the end because I'll show you both a conservative and a more aggressive way to trade it, and a way to trade it even if you have a smaller account. So without further ado, let's get down to business. I've been trading the iShares Bitcoin Trust ETF, ticker symbol IBIT. And this is essentially just an ETF that seeks to reflect generally the performance of the price of Bitcoin. So as Bitcoin price goes up, so does this ETF. As the Bitcoin price goes down, so does this ETF as well. But this ETF is owned by BlackRock. And so anything with BlackRock or Vanguard, they pretty much own the entire world. So BlackRock is a good way to go if they own the ETF. You can see assets under management. They currently have $37 billion under this single ETF. And this ETF was just launched earlier this year. But we can see it's currently at $57.84. It's up just slightly today. But if we take a look at the chart, we can see that the price of this ETF has gone up just like the price of Bitcoin has gone up. So you can see it was just launched, looks like January 11th, and it's done very well. Over here, we can kind of see how it popped up just after the election. Now it seems to be somewhat consolidating between 55 and 60. But what I've been doing is I've been selling puts at far out of the money strikes and collecting the premium. Now, if you're new to options or you're not familiar with selling puts, when you sell a put, you are agreeing to buy shares of a company at a lower price if the stock price drops. And for doing so, you get paid money up front. And really, you could think of it very similar to car insurance. You pay your auto insurance every single month just in case you were to get into an accident. And most of the time, you don't get into any accident. However, you feel better knowing that if you do, that the insurance company will cover the cost of the car. Well, that's the exact same thing when you are selling a put. But in this case, you are the insurance company. So if stock ABC is selling for $100 and you sell a put at $90, you are telling the buyer that, hey, if your stock drops to $90, I will buy it from you. However, for doing so, you have to pay me, let's say, $200 up front right here, right now. And as long as that stock stays above that strike by the expiration date, you just keep your money and go about your day, just like the insurance company does with your money. However, if the stock price drops below your $90 strike, you will have to buy the shares at $90. And every contract is worth 100 shares, so you'll have to buy 100 shares of the company per contract. All right, so you can see here, when you sell a put, you make money if the stock goes up, you make money if the stock doesn't move at all, and you make money if the stock goes down just a small amount, just as long as it doesn't go past your strike by the expiration date. Now, when I sell puts, I look at 3 different data sets that help me select the best strike possible because I like a very high probability of profit. Like I said, I use options trading in order to pay for my entire family's lifestyle. So I want to know before I enter into a trade that I have the best chances possible. So let's head over to Thinkorswim and see how we could possibly enter into a trade. All right, so I put the ticker symbol into the options chain, IBIT, and now we need to select our expiration date. Now, as far as expiration date, I do up to 45 days. Now, you're probably asking why 45 days? Well, a lot of an options premium has to do with the time value that's left. And during the last 45 days of an options contract, the time value starts to dissipate the quickest. So when we sell contracts, we are looking to receive this much and then pay back this much. So we want that time value to go down as quick as possible. Now you might say, but I don't want to wait 45 days. Well, you can always do something within that range. You can do 15 days, you can do 8 days. I have strategies that use various amount of durations, but going up to 45 days allows you to pick the most conservative strike and still allows you to get a lot of money. And when I do 45 days out, I'm typically closing out the trade with about 20 to 23 days left. So really it only ends up being about a 3-week trade anyways. All right, so let's head to the options chain so we can see we will select the strike that is closest to 45 days. So this one is 43 days out. So I'll click on it. Now the first thing I want to look at is the delta. So the delta, we can see that is the column here, but delta helps you measure the probability of an event occurring. So for example, if a delta shows right here at this $47 strike, it shows a delta of 0.14. It's saying that there is a 14% chance that this ETF's stock price will drop down to the $47 strike by this expiration date. Okay, or if it said a 0.10 delta, it's saying there's a 10% chance. So delta just helps you measure the probability of the event occurring. Now, for me personally, I like to select deltas of 0.20 or lower. So currently that would put us at this $50 strike that we would receive anywhere between $160 and $170 for. Now, if you're new to options, you're probably looking at like, why does that say $1.60 and $1.70? So every contract is worth 100 shares. So since it's paying $1.60 to $1.70 per share, well, the contract is worth 100 of them, so you would receive $160 to $170 up front for opening up that trade. So we know that delta of 0.20 is the highest we will go. And the second thing I like to check are the Bollinger Bands. Now, these are the Bollinger Bands, these black lines here, and they simply show you the range that a stock price is expected to trade within. And I normally look at the very bottom band. So we can see the bottom band here, it is at $53.13. But we already know that that is actually higher than the 0.20 delta is currently, since the 0.20 delta is currently at $50. So as of right now, $50 is still the highest strike price I will pick. However, now we need to look at our third data set, and that is the expected move. But wait. What if you can make money while on vacation, while spending time with your family without constantly worrying about bills? What if you can make the money for your entire vacation while on vacation? I personally trade options full-time and generate multiple six figures per year, enough to comfortably provide for my wife and 6 kids, and our multiple vacations per year. In Trade to Freedom, I'll show you how to create passive income streams that keep paying even when you're not working. You'll get my exact trades as soon as I answer them. Imagine being able to take that trip you've always been dreaming of, knowing that your money is still working for you. The link is in the description below. I'll see you in the community. So now we're back in Thinkorswim, and if we come over here all the way to the right, we can see plus minus 10.89. Now, that is the expected move, or with Thinkorswim, they actually call it their market maker's move, which is a phrase that they trademarked, but it is essentially the expected move. And they're saying for this expiration, they expect that the stock price will move about $10 and what is 89 cents now. So what you'll do is you'll take that number and subtract it from the price of the ETF currently, which is $57. So that will put us around a strike of $47. And that is the lowest number that we've seen from any of the 3 data points. So that is the number that I will use. So we can go over here and we will sell a put at this $47 strike. And it looks like we will receive anywhere between $100 and $105 per contract that we sell. Now, please keep this in mind. There are no free lunches in the stock market. If you are going to do this trade, you do need to have the money available to buy 100 shares of the stock. Now, you may be trading on margin, and they may allow you to enter into this trade without actually having the amount needed to buy 100 shares. But just keep in mind, if the stock price does drop dramatically very quickly, you may need to buy to close at a very big loss. So the best way to do this trade would be if you had the amount of money in your account to buy 100 shares of the company. Now, what if you're like me and you're fine with a little bit more volatility in order to bring in more premium? Well, that's where ticker symbol BITX comes in. Now, BITX is a leveraged ETF to Bitcoin, and it's a 2x leveraged ETF. Now, if you're not familiar with leveraged ETFs, they simply look to 2x or 3x the performance of a stock or a sector within a single day. So since this is a 2x leveraged ETF, it looks to move 2 times the amount that Bitcoin moves per day. So if Bitcoin moves 1% up for the day, this ETF looks to move up 2% for the day. And the same is in reverse. If Bitcoin moves down 1% for the day, then this ETF looks to move down 2% for the day. But as an option seller, the reason you would trade something like this is because it is 2 times more volatile. You can typically receive about 2 times the premium for a very comparable trade. So let's head back to Thinkorswim and look at the strikes. Now I have BITX pulled up in the options chain, and I selected the exact same expiration date that we were looking at before, about 43 days out from now. But if we look at a comparable delta to what we looked at for IBIT just now, we were looking at a delta of about 0.14 to 15. And if we come to this strike right here at $45, which is a delta of 0.15, you can see that the last trade that went through received $250 for this one contract. So that is actually more than double the premium for a similar trade that you could have done with IBIT. Now, I use leveraged ETFs every single day. And although you do receive more premium for trading those, you do want to make sure that you have the stomach for large moves. Because again, Bitcoin is already volatile by itself. However, this is 2x leverage. So if Bitcoin moves down 10% in a day somehow, well, that means that this leveraged ETF is going to move down 20%. So just make sure that you have the stomach for that type of move. But I actually like that trade, so I'm going to go ahead and open one. So I'll right click, hit sell, and then go to single. And now I need to select how many contracts I would like, and I'm going to do about 5. And I'll select the mid price that is currently at $257. And you can see here at the max profit, I'll receive $1,260 right here, right now for opening this trade. And then if we go down to the max loss, you can see it says a max loss of $21,240. Now, don't let that number scare you. That is showing you how much you would lose if Bitcoin were to go down to 0 while you had the option contract open. And the chances of that happening are obviously slim to none. Okay, but $1,260 coming to me right here, right now, when I open up that trade. Now, what if you have a very, very small account? Well, what you could do is do a credit spread. And so when you do a credit spread, you sell to open a strike closer to the money, and then you buy to open a strike further from the money. And the distance between those two strikes are the amount that you'll need in order for the trade. Okay, so for an example, if you sell to open a $50 strike and then you buy to open a $45 strike, well, the difference between those two numbers is 5, and then you'll times it by 100 because the contracts are worth 100 shares. That would mean you would need $500 in order to open that trade. And that is also what your max loss will be, minus the premium that you receive. So if you did that exact trade, but you received, let's say, $100 for opening that trade, then your max loss becomes that $500 minus the $100 of premium you received, and then that would be a max loss of $400. But let's open up a credit spread and see how this will work. Now, if you have a smaller account, you often have to take much more risk in order to grow it than people with larger accounts have to take. And so what I did when my account was much smaller, instead of using a delta of 0.20, I would use a delta of 0.30 to 0.35. And so if we were to do that, we would come over to this delta. We could see the 0.35 delta is the strike of 54.5. So I will right click, hit sell, hit vertical. And now we need to select our long strike. So which strike are we buying to open? Now, which strike you select will determine how much risk you're taking. But the shorter the distance between your strikes, the less money you'll receive. So let's say I'm willing to risk $1,500 on this trade. Well, what I could do is select a long strike that is about $15 from my short strike. My short strike is 54.5. So let's go down to 40 for our long strike. All right, so I'll select 40 for my long strike. All right, perfect. So we can select the mid price is currently at $297, which would be $297. If we open that up, we can see max profit here is $297. And max loss is $1,153 because of the premium that we received. All right, so that is how I am currently trading Bitcoin. Make sure you like and subscribe to this video. I have a lot of good stuff coming out here shortly. And if you would like to learn more from me, feel free to join the Trade to Freedom community. The link is down in the description below. You will not only get to see my real trades in real time, but you'll also get my entire options framework that I use to bring in multiple 6 figures per year. And you get to join a community of people that have the exact same goals as you. But I'll see you guys in the community. And until the next video, peace.